some of the important gold majors? You know, we're talking a bit about specific tier companies and stuff. And if you believe that the gold is going to rally, which companies should one be looking at?
The majors are, you know, you come up with the obvious names. You can come up with your Barricks and your Newmonts and your Kinrosses and your AngloGold Ashantis and your Goldfields and your Sibanye's. And a large part of their equity movements will depend on the price of gold. There is always a good case for taking a sort of portfolio approach to mining investment. I once did an analysis, and it was of 10 junior mining companies, and what it showed is that you couldn't afford to not be invested in the big winners. And therefore it suggests that a portfolio approach is by far the most efficient one to adopt, and also to include with that a degree of investment in the metal itself. So you always want to buy a range of them. The one thing I would, and indeed with that you want to buy some juniors as well. And also the juniors are the junior producers, which are sort of medium-sized within the range of investment possibilities, they are the ones that tend to be subject to merger and acquisition activity if the gold price were to start moving. So you certainly want to be in the medium-sized producers, and then you can have a scattering of juniors as well. The only other business plan, which is a bit different to that, which I would highlight to investors not to forget, is the streaming companies. So companies like Silver Wheaton, for example, which have a lot of the attributes that mining companies have. They have exposure to blue sky, they pay a dividend, they have exposure to production upside for all the reasons you want, but they don't have the same cost risks because they are part of the streaming contracts they have with the underlying countries. It defines what their costs will be, and they are a very attractive investment proposition as well. So investors shouldn't, I suppose the point is, if you're asking strategically, you want a portfolio, but don't overlook those slightly different business plans as well.
Okay. Well, what's less risky, buying individual mining shares or getting into exchange traded funds tracking the metal?
It's difficult to say what is less risky, because risk and reward, there should be a relationship. So traditionally, if you're looking at an ETF, it's the same as buying the metal, or for these purposes, I think it is. You would expect in equity to have a geared relationship with that, so you expect there to be more risk and more reward. That's really part of the reason why you want both in your portfolio, and you don't just want one or the other. Now, sometimes you'll find the metal will outperform the equities, but sometimes it's vice versa. It can be quite difficult to tell because, of course, how the equity moves depends not only on how the metal moves, but also how currencies move and how costs move. And there are many more things feeding into that equation than there are just for the metal itself. So it's really I come back to the strategy is you want to have a portfolio approach. And if you don't have a portfolio that's large enough, then you probably want to invest in some sort of mutual fund, unit trust, investment trust type fund, which will give you that approach de facto anyway, so you'll get the same result, but just by a different mechanism.